We are on the verge of the next significant decision whether we are going to witness the next decrease or increase in the Bitcoin price. For that, we have some new important data, like, for example, how the ETFs are evolving. Currently, these are market defining due to the significant money involved and the attention it receives from everyone. Timo will take a closer look at the whole thing with you guys. He'll also look into what the current general reactions to the ETF openings and closings are every day. And he'll also check where the most important liquidity areas are right now, so that we really know how the price will probably move in the next few days. Otherwise, of course, we'll take another look at the charts. Here we also have a very, very important retest currently. And of course, the question is, how will the whole thing develop? Of course, we'll also take another look at the smaller time frames to see what the real important price ranges are that we shouldn't undercut or exceed. Of course, Timo will take another look at the whole thing with you in the smaller time frames to really know which price ranges are now the most relevant. If you like it, feel free to drop a like or comment. That supports us in pushing out daily content for you so you can stay up to date. Feel free to subscribe and activate the bell for newcomers. Stay up to date every day. By the way, we uploaded his first major update yesterday, similar to a weekly update, where we've summarized the larger time periods for people who may not want to be up to date every day, but just want to check in once a week perhaps. You can check it out later. Let's focus on the daily content for now.
Bitcoin is pumping, even though Grayscale continues to sell hundreds of millions of dollars worth of Bitcoin every day. So let's examine together how to interpret all of this in this specific part of the discussion. And for that, we naturally have to take a look at the ETF flows, currently a very, very important on-chain date for us. And what do we have here now, huh? These are always reported to us with a one-day delay, and it's very nice to see that. Yesterday, or rather on Tuesday, the 23rd, in January 2024, Grayscale once again sold a total of $515 million US. These have caused us to once again see a negative outflow in Bitcoin spot ETFs across all ETFs. A total of 106 million, so to speak, have flowed out of the ETFs. That's the second highest value, and that's also really, really important for us. Why is that so important? Because if we take a look at the chart, the Bitcoin price was still pumped yesterday at times. Why? What's the whole thing connected to? Well, to put it simply, the course has encountered a rather substantial downside on certain occasions. Nevertheless, I think it's a really positive or healthy development that we're seeing occasional pumps, even though this immense selling pressure still exists. At the same time, we also have to say that Grayscale sells the Bitcoins with a time delay, which means the actual trust or the ETF share has already been sold, but the actual sale of the Bitcoins typically occurs 1 to 2 days later after the initial transaction. You can check out how this system works again in our weekly update. Just swing by the channel and check out this video. I don't want to go into that again here. Nevertheless, as mentioned in this tweet, it's a generally positive sign that for the second day in a row, despite significant outflows in the first hours, we don't see a market dump, but rather the market remains relatively stable. This stability indicates resilience and a potential for recovery in the near future, which is encouraging for investors. What does that mean for me now? We currently have, you could say really a whole lot of negative news. Keep selling Grayscale. At the same time, the other financial service providers cannot compensate for this with their buying pressure. At BlackRock and Fidelity, the top two in the column, sales figures are slowly declining. Even at BlackRock, inflow was only 160 million yesterday. At Fidelity, it's still around 150 million, but clearly that's no longer in the ballpark of the early days. BlackRock had nearly 380 million on Friday, as we see here. Now, the big question is, how will this play out? For instance, does Mount also become ISGOC starting to sell off now? Currently, we are estimating a duration of approximately 60 days. As mentioned in yesterday's video, this would align with the start of the second quarter. The emails were sent out, now we have to see how this develops, but here is a projected sales pressure throughout the year 2024 of approximately. There are 143,000 Bitcoins in the room.
However, if we consider the entire situation from a technical standpoint, it must be acknowledged that Bitcoin remains relatively stable in comparison to the current state of the news. Therefore, what observations can we make?
We saw the interim retest yesterday at $38,500. Clearly we're here. You can also draw the whole thing on a horizontal line, briefly bouncing on the peaks of the last consolidation, but now we're retesting the $40,000 mark, and that's definitely a strong sign, as described in this tweet, that we don't always see such a big selling pressure in the first hours of market opening. But what's important for me now, I've said it before, we definitely want to see a daily candle close in this red zone from a technical analysis perspective so that we can assume that the bulls have truly regained control. But we see it, so far the bears are really strong at it. Again and again, as soon as we test this range of $40,000 to $40,500 to sell off again. I also think that will continue. But now, as I said, it's getting interesting to see what's happening on the smaller time frame. And that's when I discovered a bunch of things. So we talked about this yesterday, that there could be a falling free methods candlestick pattern forming here. It didn't come to that, but the next 4-hourly candle experienced a pump above this very strong negative 2.3% 4-hourly candle. We also tested the $40,100 level with 2 4-hour candles. But as I said, we didn't see the 4-hour candle close here either. Before we want to see the day candle close, we first want to see a 4-hourly candle close, which doesn't seem to be the case. Now, one thing could work to our advantage. We can examine it on the smaller hourly time frame. We're currently forming a free rising Wallace chart pattern. The whole thing actually just means the bulls keep gathering after this stronger sell-off of bearish power. Consolidate or always have a bit of easier upward movement where they then come out with quite a bit of force, then there's another smaller sell-off. Actually, we can talk about it now. If this chart pattern breaks out, we should definitely go above $40,500, a significant price level to anticipate. Right now, though, it's very clear to see on the hourly time frame that the price is really struggling to break free from those $40,180 marks. That's why it's really important for me to see how the next hourly candles develop. Maybe we can make it back into this important zone with today's day candle. If the day chart closes in this range, a lot could be possible in my opinion, even for the Bitcoin weekly candle. Let's take a quick look at that again. I mentioned before that I actually expect a bigger correction this week if we were to close below the $40,000 mark. That means this week is going to be really crucial in my opinion for the upcoming weeks and even for the next few months. Will we see this correction again, or do the bulls stay in the market? What supports it now? What opposes it? We also have two very interesting on-chain data. First of all, we still have quite a bit of liquidity, which has accumulated in the last few days in the range of $40,000 to $43,000 on the smaller time frame. It could, of course, be that we don't see this bigger dump that many have predicted yet, but instead temporarily graze this liquidity again. For me, especially on the smaller time frame, the liquidity maps aren't that interesting. Instead, I think it's more likely that in the long run we'll test this range again, as I mentioned in yesterday's video, from $33,000 to $45,000 if we look at it on the weekly time frame. That would really be just now also in relation to our previous longer lasting consolidation in the middle of last year that we waved down here again real quick. First, the weekly candle close must drop below $40,000. That's it from me for this chart analysis. Hope you enjoyed it. Feel free to like, subscribe, and hit the bell.
See you tomorrow. Goodbye.